I mean, it's not that complicated.
You know what else I found is, I think everybody's looking for the right way to invest. That there is one thing, that the silver bullet that's out there, and I got to find that. And you know, I think there is no one way. There is no right way. There's the right way for you.
That's true.
And whatever feels comfortable and whatever makes sense intuitively to you, the thing is to find that and then just go with it. Because your way isn't going to be the same way as everybody else, right? Your way is real estate. My way is paper assets.
Yeah.
You know, it doesn't really matter. Find somebody who's achieving the results that you want, learn from them, and then go with it.
And that's part of the financial machines. So it can be as simple as a gumball machine.
You know, one of the things I've always thought is, I think particularly with our kids, it's so important because, like you said, isn't it a travesty? I mean, I know for myself, I attended some of the best schools that this country has to offer, and I wasn't even taught how to balance my checkbook. I took business law in high school, but nobody taught me how to balance my checkbook, right? But for kids, if you could just take, especially kids who are in challenging situations, and you could teach them a couple of principles like compounding interest and some entrepreneurship, and teach them, you know, even if it's just how to pick up cans on the side of the road and then invest that money. We would every one of those kids could go to college just on the cash flow, you know, and that was generated from that. And you know, what a great way to solve the problem.
So I want to take a
And you know what, I think cash flow is really intuitive when you think about real estate, because rent, you know, makes the most sense. But I think when you look at the other areas of cash flow, there's actually 5 different ways to generate cash flow. You referred royalties from intellectual properties, one, rent from real estate is another. And then on paper assets, you've got 3, interest, dividends, and option premiums. And I think people, you know, I gravitated towards paper asset stocks and bonds, and most people don't think of cash flow investing as really, or at least not the sort that will pay you enough to be able to live comfortably and pay all your bills. They think you have to go to real estate for that, which is an outstanding way to do it. But paper assets are also equally well suited to cash flow investing.
And well, you're one of the first people I talked to that understood cash flow from paper assets, because I don't understand paper assets. It's not my forte.
Well, you know what it was though, when I lost all that money, I always talk to people about defining their money's higher purpose. Okay, what is the purpose of your money? Because it's not just to have it. And back then, I defined my objective as always having enough cash flow to be able to pay my bills and live comfortably no matter what happened. If I lost my job, if I became sick, if I had to care for an aging family member, because these things absolutely do happen. And the sort of paper portfolio that we're used to, the capital appreciation portfolio that we buy in hopes that it goes up in price so that we can sell it to some greater fool later kind of thing, you know, was not going to give me that. And so the interesting thing was when I started looking around, this was 15 years ago, and trying to figure out how to do that with paper, because I just naturally gravitated towards paper. Real estate, it kind of scares me.
I really find what suits you.
And I'm really envious of people who can invest that way.
Likewise.
There wasn't. You know, people weren't talking about that because it wasn't the issue that it is today now with pensions going away and people losing their jobs. You know, when people went to work for a company for 30 years and stayed there the whole time, it wasn't a big deal, cash flow. Now it's huge.
So right now we've got market fluctuations happening. So sometimes the markets are up, sometimes the markets are down. Does that concern any of you? Are you aware of that? Is that something on your mind?
I am aware of it, certainly. I don't know how you live in this world and not be, but you know, there's a couple things I think that for me I look at. You know, one, we are fortunate enough to live in a great country with the world's greatest economy, the most transparent economy. If you look at any of the times where we have experienced difficulty, back to your chart, 1987, September 11th, when Reagan was shot, any of the times the market went through turmoil, you can look back 10 years later and say, I can look at that and know that I would have wished that I had taken all the money I could have laid my hands on and invested it back then. And if you can keep that in your mind, it's easier to put these in perspective as being more short-term disturbances as opposed to longer-term, issues. I think we all have a tendency in our mind to think that whatever we see is going to continue to happen. So
Yes.
if it's going down, it's going to go down forever.
Right.
If it's going up, it's also going to go up forever. And we know trees don't grow to the sky, right? So this is just part of it. Does it worry me? No. But I will tell you this is why I invest my money the way I do. It is times like this is the reason that I invest for cash flow, and I know you guys all agree with that. Yes. If markets only went up, then there would be no, investing would be easy, there'd be no point.
So with a down market, you like the down markets. You do well in the down markets.
I do well in down markets, and I have the peace of mind of knowing that my lifestyle is not dependent on the value of my assets. My lifestyle is dependent on the income my assets generate, and that's unaffected by the market turmoil. That's why you invest for cash flow.
Well, I gotta say.
Well, think of it this way. Profit is the reward for risk.
Yes.
Right? You can't make money without taking some level of risk.
Right.
So really when you start talking about fear, what we're really talking about is properly managing your risk. Right. Don't go out and take so much risk that it makes you hugely uncomfortable, it puts you in jeopardy. But know that, well, yes, you're taking some risk, you're putting your money at risk, therefore there's going to be some fear with it. And to work through, just to let that be and let that be okay and work through. But to look at the market and say, well, gosh, the market is going down or might go down, so now I don't want to start. Well, nobody knows, right, what comes next. So you have to look at investing not as what's happening this moment, but as something I'm going to do for a lifetime. Okay, so the fact that I'm going to do it over a lifetime, what's happening today is really irrelevant.
Yeah,
because you're going to keep doing it.
Right, and it really is a process.